Good morning, students. Yet again, a video on cash flow statement. Now, if you will notice, students, in this cash flow statement, there are three activities, that is, operating activity, financing activity, and investing activity. We will be concerned with only operating activity for the time being. Operating activity is to be calculated, to be found out by doing indirect method. That is, we will take from net profit and not from direct sales. See, operating means what? Means what is the main work of the business? The main work of the business is sale and purchase. So to get the operating profit very simply, we can say all revenue that is from sales, less all the expenses, we will get net profit. But that is already being done while calculating net profit through statement of PL. And again, we have subtracted different appropriations from the statement of PL and we get surplus in statement of PL. Actually, in the sum, you will be given this surplus on statement of PL. In that surplus of statement of PL, we will be adding all those which we have already appropriated, like general reserve, transfer to any other reserve, and all many other things, dividends, etc. And then we will be getting net profit. From that, we will be we will be adding up the uh, uh, tax, refund of tax and all, and we will be getting our NPBT, net profit before tax. Okay, so let's see the sum. This operating activities we have divided into first in the calculation of net profit before tax, which is not to be shown in the cash flow statement but as a rough work. Again, we will be doing NPBT big sums, and then we will be finding out operating profit before working capital changes, and then working capital changes, how to find out, and then we will get our operating activity. So it's a big part. So small part we will be doing every time. So it's already given transactions not acha. This is a very important part. Some of the transactions which are not involving cash and cash equivalent things, we will not record in cash flow statement. Like when we buy asset and we do not pay, we will pay on, we have purchased the asset on credit. That means we will pay later on. That means it is not a cash and cash equivalent item. So it will not be coming. We have purchased assets and we have paid through shares, by issuing shares, by debentures, or by taking any other loan. Then those items will not affect our cash flow statement because cash is not involved. Cash flow statement means inflow and outflow of cash. So if cash is not involved, it will not come in cash flow statement, as simple as that. Methods, we have the direct method, which is not in the syllabus. And ICAI, Institute of Chartered Accountants, have told that cash flow statement will be only prepared through indirect method. And this indirect method is mostly applicable in operating activities. Okay. Indirect method, why? Because we start with net profit after tax and reach net profit before interest and tax. Because we have the profit, so we do not need sales and other revenue, and neither we need any expenses to again find out the profit. Moreover, we have already prepared statement of profit and loss prior to cash flow statement, and we also have prepared we also have got surplus in statement of profit and loss by deducting all the appropriations. From those appropriations, from those statement of profit and loss, we have to get net profit before tax. So it's a backward movement, down movement. From down, from non net profit, there is surplus of net profit. We will add back all those appropriations, and then we will take the tax part, and then we will get profit before tax. That is, entire NPBT calculation is shown outside the cash flow statement as a note, as I've already told you. If the balance sheet is given, then we have surplus of statement of PL. So what we have, whatever is already appropriated, we add back. And if statement of PL is given, then we get directly NPBT. Only the tax part we have to take, and our sum is done. These are the entire step of doing cash flow statement from operating activities or to find out operating profit. Only operating activities I'm talking about. We have left with financing and investing that will be shown in later classes. Step 1, we will calculate NPBT, and in this video, I will be only showing this step 1. The adjustment of non-cash and non-operating expenses and incomes, we have to add back and subtract. The income subtract expenses to be added back to get operating profit, because we don't want net profit, we want operating profit. Then we will adjust the working capital, that is current asset and current liabilities movements, and then we will have operating profit. From that, we will deduct or add tax paid, add refund, deduct tax paid. We will get our cash flow from operating activities or cash used in operating activities. This is the entire format of finding out cash flow from operating activities. But we will be only proceeding with step one today. So, step one, where to see the items? Step one, NPBT, net profit before tax, where we will see when the sum, the entire big sum will be given. Where we will see the reserves and surplus. We will see the adjustments. It is just like your trading account and profit and loss account as you prepare. They have given one format of trial balance and then some adjustment. If not trial balance, they will be giving you a schedule 3 format, some sum in which reserves and surplus you will be getting from the balance sheet. Then there is adjustment written. You will read the adjustments, and the reserves and surplus part of the balance sheet you will see to get the profit. Adjustments you will see, and you will see also short-term provisions and different other item which is given over here, that is required for other part of operating profit, operating activity, cash flow from operating activity. We are only concerned about point number one. Today we are only concerned with point number one. Now, how to do? The rough work will be shown like this. It will be in the rough as a note, working note. Okay, as a part of cash flow statement. It is not exactly the part of cash flow statement. It is shown as a rough. We have to find out the net profit. If a balance sheet, reserves and surplus and all are given, then we have to find out the net profit to closing minus opening. If a statement of PL is given, net profit is already given. Add proposed dividend of the previous year. Provision for taxation of the current year you will add interim dividend, add transfer to reserve except SPR. Security premium reserve is not a part of profit. It is coming because of capital. It will be shown in the investing activity. It will be shown in the financing activity. Transfer to reserves will be not shown over here. So transfer to reserves, this part will not be shown over here. Transfer to reserves will be shown except SPR. Transfer to general reserve, dividend, debenture reserve, capital reserve, whatever we are transferring, that we will be adding back. Then we will refund the tax if credited to profit and loss, already credited, so we will refund the tax. Less we will do that, and we get profit before tax. This is what we need to do in the rough. Let's see, students, one sum from the following information relating to the year 31st March 2019. Calculate net profit before tax. That is the sum. A part of the sum it is. Surplus, that is balance in statement of profit and loss, opening figure is given. You can say it is the 2018's figure, 2 lakhs. Closing figure is 6 lakh 72. How to find out the net profit? Closing minus opening, that is 4 lakh 72 is the profit. Then we have transfer to debenture redemption reserve. Already we have transferred to debenture redemption reserve this one. So we will be adding back this 2 lakhs. Then proposed dividend for the current year, we have to add back 1,80,000. We will not take the proposed dividend. We will take this 2,80,000, students. We will not take 1,80,000. This is for, or I shall make rather this one to 18 and this 19. We will ignore 2019's figure. Why? Because we are ignoring it because and only because 2,80,000 we are ignoring because this has been proposed. Whatever has been proposed last year, that is declared this year. So we will take this year's figure. This year's means last year's figure is whatever is proposed is finalized in 2019. In 2019, we have subtracted 1,80,000 out of our profit as dividend paid. That we will add back in order to get profit before dividend, profit before tax. Transfer to workman compensation reserve, we will add back. Interim dividend, we will add back. And transfer to compensation reserve, we will add back. Transfer to compensation, workman compensation reserve is also 2 lakh students. Okay. Then interim dividend we have to add back. Then provision for tax made during the year, this also we have to add back. Whatever is made the tax during the year, that you have to add back. And at the last we will see a refund of tax is done. So that also needs to be subtracted. You cannot have income tax paid and refund in the same year. As such, refund of tax 10,000 is done. So let's do the sum. So you see transfer to dividend. So first of all, closing minus opening, we got our surplus or profit, net profit after tax it is 4,72,000 net. Add transfer to debenture redemption reserve 2 lakhs. The transfer to debenture redemption reserve was 2 lakhs. Then we have proposed dividend of the previous year, 2 lakh, 1,80,000 previous year, that is 2018. Interim dividend paid during the year 1,44,000 we have added back. Then provision for tax made during this year, current year, this is current year, 2 lakhs we have added back because whatever had been provision has been made that we assume that we have to pay this year only. So we have to add back this one. Transfer to workman compensation reserve of 2 lakhs, that also we are adding back. So we have taken almost every item. So we got 13,96,000 as our profit before tax adjustments. Less refund of tax. There was a refund of tax that also has increased our profit. We are reducing it 10,000, and this our net profit before tax and everything is 13,86,000. Yes, dear. This is the sum. Now, this is your homework. Please do this sum, a good sum. Please try to do it. Remember whatever has been told regarding, especially regarding dividend. The previous year dividend we will add back. Regarding tax, current year's tax, whatever has been made, that also, that only we have to add back. That is only to be paid. Previous year dividend is finalized this year. So previous year dividend only we will add back. Current year's dividend we will ignore. Okay, students. Thank you. If you have any problem, please let me know by any means. Thank you, students.